All right, so let's begin the show. The Security and Exchange Board of India has proposed sweeping changes to mutual funds' total expense ratio TER, which accounts for the fees and expenses charged by asset management companies. Now, as per the SEBI proposal in the consultation paper, the total fee charged to a mutual fund investor or the expense ratio should be inclusive of all expenses, including brokerage paid by fund houses to purchase shares or other securities. Now, with new norms, these services will come under the ambit of TER and can cost AMCs almost 1,400 crore per year. Would that mean shrunk profits for asset management company and lesser fees for the distributor industry? How viable is this for the unit holders' perspective? Let's understand all of this in deep detail with D P Singh, Deputy MD, SBI Mutual Fund. DP sir, good evening and welcome to the show. And SEBI is proposing uniform TER in an attempt to enhance transparency to the cost charged to the unit holders. Now, you must have seen the proposal. We all have. It's a 40-page proposal. How are you reading it? What is the sense that you are making out of it? You are India's largest AMC. Also, tell us from an investor's point of view, what do these proposals mean? And what is the existing pattern of what's been proposed? I've actually asked you a lot of questions in just one question. You can just break it down.
Yeah. No, thank you, Kavita. Thanks for having me. Honestly speaking, we are also going through the numbers. We are still trying to see how it will impact. Of course, SEBI has come out with its paper on the basis of some discussion they would have internally. They have definitely shared with the industry also. But there are views like this. This is somebody thinks in one way, and of course, this is a consultation paper. We are working on it. We'll respond to the consultation paper, and I'm sure, see all angles, looking at the all angles from this thing, from the investor point of view, from the industry point of view, from the intermediary point of view, and more than anything else, keeping in view the growth of the industry. I think the final whatever will come will be for the benefit of everybody. While saying so, I think there's a lot of growth capital which still this industry need because we are not yet scratched the surface. When we look in the percentage terms, of course, it looks like that we have grown very well. Of course, I can't deny that we have grown very well, but the opportunity and the potential is much larger, and we need to reach out to many more nooks and corners of the country, for which the intermediation is required, and see a proper economically viable remuneration structure is definitely required for the growth of any industry. I think we'll be putting forward our views, and we'll see how it is impacting overall, and a rational decision will finally be there. I'm very sure about that.
So, looking at the current structure of these proposals made, DP sir, what could be an intermittent challenge for an AMC like you?
See, immediately there's as far as we are not capital intensive industry. We don't need much capital. That is very much there. Profitability less or more is a secondary point. But my point is not even I'm not looking at from the AMC's point of view. Mostly what I'm looking from the penetration point of view, the growth of industry point of view, and what happens here. The structure which is being proposed. It's differentiating between the larger AMCs and smaller AMCs. That is something which we have to understand, because the responsibilities and accountabilities of the bigger AMCs are also different from the smaller AMCs, and smaller AMCs are doing a pretty good job in giving solutions to the industry. So it has to be, in fact, if you look at the existing structure also, the larger the scheme size, lower is the expense ratio, which is already there. And during the last 5 years in 2018, the expense ratios, average expense ratios at the industry level has come down by 40 basis points. And we have schemes, the larger scheme, where the expense ratios have come down as high as 50 to 60 basis points also over the period of 5 years. So that system is very well inbuilt in the system. But going forward, what the structure is being proposed is at the overall AUM level. Of course, I think there are some different ways of looking at it, and we will put forward our point of view, and I'm sure that will be considered.
break down the current structure, DP sir, and when you say that, when SEBI says that TER must include brokerage expenses too, so far what's the breakup, and were investors actually being made doubly charged? What could be the impact of this on the fund house if this proposal gets through?
So that's fine actually. That they have a reason to say that. And today when they allowed extra charges. So the point of SEBI is that it should be totally transparent, and I think that nobody can deny that people should be aware that how much expenses are actually being charged when we are showing something and actually charging little more. So there's no denial on the fact that when we are at the highest level of transparency, there should be nothing which is hidden. So that's absolutely fine. That can be taken care of. That's in any case, this 12 basis point which is being talked about is the maximum limit. And I can't say for everybody, I can't vouch for everybody, but I think majority of the fund houses average expenses which are being charged are 3 to 4 basis point or 5 basis point. That's it. So that's how it is being charged. And if that is being brought in the total expense ratio, that's fine.
How is SEBI asking the AMCs to use the investor education fund? What's being proposed on those lines?
You see, they're saying that the B30 incentive, which is being paid when we were charging extra to the scheme, rather than charging extra, it should be paid out of the investor education fund. Which, of course, when this started, we were charging 2 basis points. That time, industry was 8 lakh crores, and today industry is 40 lakh crores. And see, with the kind of the thing is coming to the new investors only. I think this one page should be good enough. And see that's not a big issue.
One very interesting proposal is performance-based TER. SEBI has proposed performance-based TER. How are you looking at it? It's a widely adopted concept in the West, but then do you think this can actually work? And if the fund is not performing, you don't need to pay that extra money to the fund manager. How are you looking at it?
But this is being proposed as one of the categories, right? So there's no issue. This is something between a normal active fund and PMS. PMS generally there is the performance fees, etc. And here, if you are talking about it, then see, this is something. One category is good enough. If there is one fund which is charging on the basis of the performance only, but only issue is when how it will be implemented, because in equity funds, I can't say that 1 year is the unit, because generally we advocate that this is if we are very bullish on a particular stock and we pick up in our portfolio, that stock may see the traction in the market during the first year itself, or it may take 1 or 2 years. So it's very difficult to put a unit, I mean, year as a unit or quarter as a unit, or 3 years as a unit. So that's something which we'll have to see. We'll respond to that, seek the guidance, and we'll see how it is to be implemented.
Now, in the implementation, the question is, when does an investor actually gets charged? Because a fund will have a cycle of performance, and there will be times when the fund can perform. There will be time when the fund must have underperformed. Any guidelines on those lines mentioned in the proposal?
Not really in the proposal. That's what I'm saying. We'll have to debate on that. We'll have to interact and understand what is how it is to be calculated.
Right.
That's a separate thing to be discussed. But I personally feel that this is consultation paper, and I'm very sure if we are able to put forward point with backed by the proper data and the conditions. So as on date, I'm not very worried. And as an industry, we can handle this, but there are some concerns which we'll definitely tackle and discuss with the SEBI over the period of time.
Sir, just looking at the consultation paper, did you do any number crunching? Because this seems to, come as a shock for the industry of almost 1,400 crore. How do you see this impacting your AMC? Did you do some maths? Anything that you can talk about on those lines?
So we are in the process of looking at it. And second, Kavita, I mean, since we are in the sunrise industry, so over the period of time, volumes will also make up for it. So we can't say on a particular day, and this when we are calculating, we can't say this is going to remain the business. Business will grow. In percentage terms, we may lose. but in the absolute terms, we may grow. I mean, these things have happened earlier also. But as I said, when I'm not looking at the number as of now because I feel a lot of things which we can discuss. And see, honestly speaking, SEBI is listening, SEBI is consulting, and they will definitely discuss, and they will get convinced, and they will convince. That's the point.
Right. Could you also explain the proposals made on the NFO collections?
I think that's the story of the past. And if you look at today, the NFOs in any case, most of the fund houses have exhausted all the categories. Maybe one or two more categories come, and moreover, the kind of regulations which are there on the distribution of fee, etc. I think these things are I mean, we have seen the worst, and I think we are beyond that. And nothing, no abuse can be done as of now.
Mm-hmm. How do you see TER getting uniform for equity and debt? What's the TER now for equity and debt? If you could just tell us the breakup.
So today, the equity funds, every category of funds, there's a graded structure, which is up to 500 crore rupees, a particular amount. And then as you keep on going, just to give you an example, one of the funds which we are having, 7 years ago, I mean, 5 years ago, when we had 2018, we were charging on that around 2.10% as the TER. And with the growth of size, today that fund is charging 1.35% because of the size going up. So it has already happened. And the benefit of that low charges have already been passed on to the investor. But going forward, we uniform I mean, if the overall structure comes down, there will be some funds, very big funds, where it can move up. Because one good thing which has been done, because there's a GST issue also, which has not been discussed because they have increased the maximum from to 2.55 from the existing 2.25. So going by that in a graded manner, so something will be taken care of. And of course, whenever there's a hit, it has to be passed on partially to the distributors also. But my issue is the new distributors are not coming into the market. If they don't have a viable, economically viable the business point, then they will not enter. And mutual funds being B2B, where we have yet to reach even a percentage of what the advanced economies are, I think there will be an issue because growth capital will become scarce and it will be difficult to reach out to many more nooks and corners of the country. So that's something which may concern, but I'll have to see the numbers to really make up my mind on this.
SEBI is also giving a lot of thrust to, to curb mis-selling and to ensure there's transparency. Overall, looking at these proposals, do you think it's actually serving that kind of a purpose? And obviously, all stakeholders are needed in this particular thing. But then, do we really expect this particular sector to go more transparent, or you think that it'll just complicate it further?
I think we are very transparent enough. As far as mis-selling is concerned, there cannot be any two views. The mis-selling has to be dealt with very severely wherever it happens. And over the period of time, I will say that the distributor community, which is being charged with the mis-selling, over the period of time, a lot of discipline has come into being. So even they are behaving in a very responsible manner. And this is a evolving situation. And already the even for the mis-selling, the AMCs are taking all the actions. We have seen, see what happens sometimes, distributors versus the investor also, there are some issues which we come to know later on. So we have to see overall how the interest of investor is taken care of. And I think regulator, AMCs, everybody is having a single view that there can be zero tolerance on the mis-selling. We cannot afford to do that. But only advantage to the mutual fund industry is that everybody is putting money in a liquid asset. So one can withdraw at any point of time, but that's not a point that you should have mis-selling. But the mis-selling and other instruments like insurance where the money is locked in has far-reaching consequences than the mutual fund mis-selling. But While saying so, I'm not at all suggesting that even if some misselling is there, it's acceptable. Not at all. It's zero tolerance. But yes, this is liquid and people don't get. If you look at the complaints, etc. Also, the mis-selling complaints in mutual fund business is much lower than other instruments.
Last question to you. The proposal also focuses on women investor education and women participation. How is it laid down there?
So very interesting vision which SEBI has come out, because this is one of the very progressive steps within the from the investor education one. Only if new women investors are brought in, then there's an extra distribution cost which is to be given. I think we will welcome that, and we are very happy to do that in our businesses.
All right, I think that will be all. We all are waiting for the final print that will be approved, taking all the stakeholders under consideration. But then till then, thank you so much, DP sir, being on the show and helping our viewers with this today.
Thank you very much. Thank you very much.
On that note, we'll slip into a quick break, but then post that, let's talk about ICICI Pro Large and Mid Cap Fund.